All right. Hello. Welcome, everyone. It is that time of the month again. What does that mean? It is person's user group. It's kind of interesting. Several weeks ago, the last PUG meeting, someone said, "You ignored my questions." And I didn't ignore questions because I guess the format is we go first. Not really. I try not to go first come, first serve, but a lot of people have sent emails in, and we take the time. Mary does, actually. Mary takes the time when you send those in. She prints them out, and then she runs them over to my office, and these questions you need to answer. So I am answering those specific questions, and that's where I take my marching orders. Jerome, how are you doing out there in California? And George Valle, hello there, Dale, and I wish everyone is doing well. Gosh, what can I say? We're going to start with an easy question, and then we'll work in the hard ones. How's that sound? So I did understand that the sound is pretty good. It's believe me, it's nice to be heard sometimes. Thank you very much. Larry Pesavento, yes, he has his own radio show, and I was a guest. Larry and I, there's a few people that are old dogs in this world. I guess now I'm an old dog. But Larry's the godfather of Fibonacci, and if you ever look at who his students were, like Joe DiNapoli, and I don't know what I was friendly with Joe. I don't know what happened to Joe. He went to Thailand, and I haven't heard from him in a decade at least. Joe DiNapoli, DiNapoli levels. He was a student of Larry's. People don't know that. The list goes on. Larry's good people, man. He's top shelf. He did a lot of extensive research with Gartley, and a lot of people picked up on his work. With that stated, I'm not looking for sympathy, but I may struggle through this. So please be patient with me. I actually got the Johnson & Johnson vaccine shot. And I want to let everyone know something. I feel like my arm, like someone took a hammer and punched the hell out of it. I mean, it's like bruised. It's like, ow. I feel extremely lethargic. I had fatigue, muscle aches. Like if a bad flu is, all I can tell you is, man, if this is just to get your body tweaked with the symptoms, I couldn't imagine what you got to go through with the COVID. So they say lack of focus, fatigue, muscle aches, and yes, check all the boxes. That's where I'm at. So I will focus, and we'll get through this together. So if anyone else has experienced those symptoms, man, it's tough. Some people have taken the Pfizer, and they get it like on the second Pfizer shot, the booster. I don't know how that all works, but I did the Johnson & Johnson, and I'll tell you what, everyone, a few people that I've talked to, they all say the same thing. Yeah, man, it's tough. So anyway, the good news is, well, I got a vaccine. I guess that's good news. The bad news is I feel under weather. So here's the deal. Let's start with my friends out in Singapore. They're going to be watching the replay. Before we begin, I think we have a disclosure. Trading's risky. Thank you very much. Not all trades work out the way we want, but risk management's fairly important. So that's what we try to strive to do to help traders get better. It's okay to have some losers. Just don't let it tear you apart. Stops, as my famous line is not for sissies. Just remember that. The first question, John, you have a commitment to traders report COT indicator, and the answer is true, but you often refer to your website, and that's another true statement. And I'll just say this, the reason I do look at, and I'll share this with you right now, bear with me, let me get the website back up, there we go. The reason I go, and if you go to personsplanet.com, and you go over here to resources, click on COT report, get report, and we scroll down, we're not going to get into a commitment of traders report session, but I'm just going to explain. With TradeStation, they only give the futures only. And since I believe a lot of folks are trading options and a lot of small retail traders and also hedge funds, may use the futures, you get a little bit better edge, in my humble opinion, looking at the futures and options combined. So for myself, I will look at, and if we go down and when you do look at the commitment of traders report, it's confusing. And the reason it's confusing is because there is no Chicago Board of Trade. There is no more Kansas City Board of Trade or Minneapolis or Commodity Exchange Incorporated or New York Mercantile Exchange. It's all the CME now. So how do you're going to have to like a little bit of experiment and also experience to go through it. In the old days, and all of the legacy and the historic reports and everything that's archived is done by 20 years ago. If you wanted to look at the historic tendencies of the commitment or the historic data and what tendencies were between commercials, hedge funds, and speculator, that relationship, you need to go back and look at the Chicago Board of Trade when it was its very own exchange. So in my humble opinion, I believe the CFTC still maintains the breakdown of the commodities that are traded on the old format and the old exchange. So even though wheat is Board of Trade, and they've added at the Mercantile Exchange now, there is no Board of Trade. They still list it as Chicago Board of Trade. So as you can see, soybeans, for example, it's all CME Globex now, right? So there it is. And that's the reason, the difference about knowing how to use the Commitment of Traders report is knowing what the commodity you want to look as a contrarian or a consensus indicator. And in my experience, if you take a look, since more traders are not more, but let's take a gander here at the biggest, baddest boy on the block, and it's E-mini S&Ps. And we have to scroll down to where about, right about char, right there. And here's an interesting aspect about the E-mini S&Ps. We can go back and look at the data from a couple years ago. You can look at the data from, I don't know, 10 years ago, 15 years ago, and go back historic data. You'll see that the open interest on the E-mini S&Ps is like 3 million. Now, did that get diluted because people are trading the micro futures, right? So the micro E-mini are down, if I'm not mistaken. Micro E-mini NASDAQ, blah, 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 blah. E-mini Russell, Nikkei. And this is where it gets a little bit confusing, is the micro. And I'm not sure they did break that down. I thought they did. And they have this functionality called right here, consolidated. And what this means is they kind of break down the consolidation. They break down the difference between how many contracts on E-minis would it be to equate to the big S&P. Remember, the little S&P is 50 bucks a point, so it's 1/5 the big guy. Big guy is 250 a point. That's why the open interest on the big guy, which still trades a little bit. As you can see, there's 28,000 open interest, but that's for bigger boy players, right, in the S&P 500. So the moral of the story is, since we have E-mini S&Ps and we trade options on E-mini S&Ps, I'm looking at the futures and options on the E-mini S&Ps, and I break it down between what non-reportable positions mean right here. This non-reportable positions are small speculators, commercials, and again, non-commercials are considered to be hedge funds, all right, or professional traders. How do they know this? When you open a trading account, they ask you, the first thing they ask you is this your money? If you say no, then you're trading someone else's money, and then boom, you got to go through some red flags of, well, then whose money is it that you're trading? All right. Are you acting as a professional? They don't seem to like that much when you act as a professional and you're not registered because, well, you know, people have scammed people out of money by pretending to be professionals. I know it's hard to believe in this world, but yes, it's happened. Anyway, the long and the short of it is this is a report, and the first thing that I always like to say, and I didn't want to turn this into a lesson, but it's starting to get, I wouldn't say convoluted or diluted, but it's starting to get a little weird. And I still think the best avenue of looking at the Commitment to Traders report is to look at futures and options on the E-mini S&P as a contrarian, because the little trader, the retail trader, is not trading the big one. And if they're trading the micros, they're not doing a micro option, or at least not that I've found yet, and or it's not as popular yet. And we could take a gander at what the overall position is of someone that might have put on an option. Now, whether it's a big trade or a little trade, it doesn't matter. What matters is the fact that if the small speculator is long and gets longer, whether it's the guy's last 20 bucks in his account and he buys a deep out of the money call option, he got bullish. It's a consensus. And that's the whole purpose of looking at the consensus. What is the small speculator? If you believe that 70 to 80% of the time they're wrong, I think it's more like 85%. Or 15% of the time, the small speculator, the numbers people used to think 90% of the time they were wrong. And I don't think it's that bad. I think what it is a lot of people have good sense of the market, but they just have emotions and they just don't have risk skills. You know, they let losers ride a little bit and things of that nature. So I'm not saying that hedge funds are perfect either. And we all know what just happened to a hedge fund that just blew up, another one, Archegos, whatever it's pronounced. But the point being is it's a consensus. If you notice that, hey, in the E-minis with futures and options, the hedge funds are slightly biased on the short side, and the small specs are actually pretty long the S&Ps right now. And again, this is as of the prior week and March 30th. Remember, we had a holiday. So we're going to have another Commitment to Traders report. It'll come out at Friday at 3:30 in the afternoon. And you know, if the small spec got more aggressively long here and the hedge funds got more aggressively short and the commercials got aggressively short, you know, I don't want to be long the market at the highs with the small speculator getting longer. They really added some long positions here, by the way. So for me, when I look at my indicator, and now let's go and compare an apple to an apple, and we'll go to short format, and this is futures only. Let's scroll down to the bottom. Make sure I clicked on the wrong, I clicked on Mercantile Exchange. There we go. So if you do what I did and you make a mistake and you clicked on Board of Trade, first thing you should see if you want Mercantile Exchange, you should see butter. Butter. Anyone trading butter? They used to make that announcement on the floor in the old days. Anyone trading butter? I think it was like 10 o'clock in the morning it closed. It was open for like an hour. Butter. Anyone trading? And here you've got Bitcoin futures. 9,000 open interest. You'd think that, man, with the popularity of Bitcoin on a global scale, more people would be trading Bitcoin futures. 9,000 is the open interest. Interesting. This is futures only. So we got to scroll all the way to the bottom. Let's get back up. I went too far. E-mini S&P, E-mini Industrials, E-mini S&P Financial, E-mini, here we go, open interest. Man, there's just nobody trading this market. The futures only is 2.5, and you have 3 million total with options. So bottom line is here you have kind of a similar reading, but you can clearly see that it's, I mean, 500,000. And sometimes you get, as you can see, the hedge funds are short futures. They're not really inputs. They are, the commercials are also still net short. And with TradeStation, they're only giving you this data. I want a more clear, more detailed picture. And so that's why I just do a quick little comparison and see, is there a little bit more interest in options or less interest? And to be honest with you, it's barely a $500,000 difference of extra options trading on the futures and options side. What's my takeaway? My takeaway, first and foremost, is not many people are trading the product. And then if you want to go back and validate that statement, when you go to this page, and this is something you can look at, you have historical viewable. So, I mean, you can go back to 2021, you can go all the way back to, 2013, 2012, and 2011, 2010, 09. If we go back to like March, I'm going to go, I don't know, somewhere 2010. Let's go the second week of March. And let's go to futures only and look at the Merc. And let's look at E-mini S&Ps. Let's see, they should be down here a little bit. Back in those days, we had less products. It should be E-mini S&Ps should have been somewhere. We'll find this in a minute. Nikkei, Aussie dollar was added. NASDAQ 100, E-mini S&P 400, E-mini S&P futures. There you are. I mean, 3.1 million. This is futures only, and this is before micro. So think of it this way: back in the abyss of the market crash, when we were bottoming out on the lows, which is an interesting story because, by the way, and I did cherry pick that year, the small speculators, if you look at that ratio, 6.9 versus 10.5, very opposite right now. They were very short at the exact low of the whole market. And right now they're almost inverted. And in fact, hedge funds were long, and incidentally, commercials were probably neutral, a little bit biased to the long side. But the point is that they had a heavier short position on the absolute low of for 20 years. So moral of the story is, not only is that a pretty, unusual observation that they take the opposite sides at maybe major turning points, or maybe a little correction or something of that nature time frame, and they flip. But here's the wild thing. The futures only back then, 3.1. Futures now at new highs, steady market, breaking out, they're long, and they're at 2.5. So it's 600,000 contracts less of open interest in the futures to this day, 10 years later, with more education and everything else. Where's everyone trading? Are they in Bitcoin? Are they trading other markets? Are they in equities? Are they trading stocks? Are they trading ETFs and options on that? And I think the answer is obviously yes. Futures have lost their appeal to a degree, in my humble opinion, with small speculators. In any event, this is what I just wanted to go through. I don't want to give you a report, about how to teach you how to use it per se. I think you probably got a good idea of looking at the percent of open interest is a quick way of looking at what their overall position is. 10.5 is greater than 6.9. So you know that the guys are, the boys and girls in the small speculator world were more short at the lows at that time, March 9th, 2010. All right. You can go back and look at a chart in history and look at the lows of March 10th of 2010. And it was like the low, and they were short in the hole, and it ripped them a new keister, so to speak. So anyway, the whole question is with TradeStation, okay, the data is not bad. It's just not 100% detailed. And sometimes I like to reference, because of the event that people are using more options, I like to double check, well, what are they doing in the option side? And TradeStation does not categorize that with the indicators. There's the long and the short answer. And more detailed answer, I hope you found that effective, or insightful is the better word. All right. Thank you for your question. Commitment, TradeStation, John Person Indicator versus why I use the website. All right. Also, the website, I can go back and double check things, and I have a complete historic point of view. All right, we've got Norm, who's asking another question, and that's where, whoa, I cherry picked this one all ready because we were getting ready to be ready for you guys today. Good morning, Mary. Okay, well, thank you, Norm. Good morning to you too, but it was good morning, Mary, because she knows that she's going to get this question in my hands. I remember a little bit about John's scanner platform when I purchased the algo program. As if John has time during the next PUG meeting, could he spend some time on the features of the scan, especially the Trilogy Scan? I've checked your website, can't find much about this, cost, how it works. If you have any info, I'd appreciate it. Okay, so the Trilogy Scan is just simply, we have several things. That's what Trilogy means. 3 things that need to happen: weekly buy, daily buy, LCC breakout, and it needs to have a PPS or HCD, which we coded in the background. 3 things have to happen with the Trilogy. Now, if you go over here and click on Trilogy buy and customize it, we got scan criteria. Click on scan criteria, and this is really good on for a PUG meeting to get recorded, because then you can go back and review this. If you look here, we've got one thing that you can see. It says you got the weekly, you got LCC, and you got so we've got these not activated bearish because we're running a bullish scan, right? So this is, you can double check exactly what's running and what is required to populate a result. If you go over here to symbol universe, you'll notice that I'm just running S&P 500. So in the S&P 500, now if you want to change that index to Russell or NICE or NYSE, I will remind you, you're going to be demanding a huge amount of resource. You better have a really good computer with decent memory, otherwise it won't work. All right, bottom line. So don't be doing it on a tablet, just throwing that out there. This is a pretty decent scan that gives us a little bit more filtering of our buy signal, and that's what the Trilogy is. So in the S&P 500, which I've taken, as you see, the Liberty, this is today's date, April 8th, 2021. I don't know why it says 12:28 p.m. because I just ran it a few minutes ago. And I can run it again, but that's weird. In any event, Trilogy sell. Oh, I see what I did wrong. Oh, my goodness, boy. Put the glasses on. Idiot speaking. Sorry. It was 4:12 in the afternoon and 30 seconds. I'm sorry. So I'm running it again. But this is a good thing about running the Trilogy. We were looking for a couple things. If a daily's in a sell and it's in a weekly sell and it closes below a last conditional change, man, that's even more bad news, right? That means don't buy the break possibly tomorrow. It's like, whoa, let's see what the condition is. So Nike, out of all the stocks today, and the stock market being up, down 2.84%, we have a daily sell, and let's expand the chart just a tad for us. And let me go over here. And you'd say, well, what's the where's the last conditional change? And it's that white line in the sand right here. The low of this candle, the market closed below the low of that candle. So that would have been the last conditional change of support. The market generated a daily sell, broke a key support zone, the last conditional change, while it's in a higher time frame weekly sell. So this, before I ever would look to be a buyer of this, I would like to say, if I'm a momentum trader, I'd like the weekly to be in a buy possibly, or the daily to be back in a buy. So that's one of the things of what the Trilogy Scan helped to give us better trend or trade direction. So if you're thinking, oh, it generated a sell, oh, the next day it's still good. Why don't you wait till it pops back into a buy signal, right, and closes greater than an old resistance? So, by the way, if you see where I'm pointing to right here, on March 9th, that would have populated a Trilogy buy signal. Why? Buy signal above the last conditional change, and if the weekly was in a buy, that would have given a daily a Trilogy buy. So it gives you a continuation of a trend. If the weekly's in a buy and you get maybe a 4 or 5 or 6 day pullback, but the weekly's still in a buy, longer term, higher time frame is still dominant trend up. When the market reversed and cleared overhead resistance, went into a daily buy, it gives you a better edge of going with the dominant trend, and this filtering of the Trilogy sets that up for you. And that's where we look for that. So I hope that clarified things for you, Norm, on the Trilogy, and the shorts work the other way and the longs work just as I explained. All right. Now this is pretty decent question, because I think now we have Mr. Lee asks a question, and we're a great way of segue into this next question. Hi, Mary. Again, I don't exist. I get that. I get that. I'm just the guy doing the work. Mary's the nice one. So people, that's why they love Mary and they tolerate me. I get it. It's all right. My feelings aren't hurt. Volume indicator. I would like to understand, what does the histogram within the indicator show? Well, we do have a lot of information, Mr. Lee, on that on the website, and we've taught many classes on that. But just to give you an idea, you answered kind of your own question about understanding the histogram. Is it related to the momentum of volume? And the answer is yes. So that's what the volume indicator is, a momentum indicator. If stocks are starting to rise and you see buy signals and you're saying, oh, we're going to probably break out of a high, and then the volume histogram is starting, I mean, here's a market closes on a high. The next day, the volume histogram is weakening. It's making a lower high. The next day, it's making a lower high, and it's a positive day. It's starting to show that the positive buy momentum is starting to fade. So the momentum of volume is weakening, and that tells you behave, watch out. And then all of a sudden you get a sell signal below last conditional change. And as you can identify, volume turned negative. So it went, and it confirms that the volume is strong on the sell signal. So the histogram is very important. It helps to uncover convergences and divergences. If I look at a high and I go, oh, the histogram component and the moving average of the volume percent change is greater than the last peak, I'd say, man, that's supporting a rally. In this case, this high is pretty close to that high, and the volume levels did not generate any significant greater readings, either in the histogram component aspect or the volume. Oh no. Get back. And we can do that by automatic scale range and hit OK, and it should come back. There we go. So we're looking at the volume histogram. It had a shot of going up, but it's kind of like devil in the detail. If it's not generating a lot of powerful upside momentum, it's probably a relative weak light volume rally. And then when it gets a sell signal, it's vulnerable for bigger declines. How about the lines? Is it related to percent? Yes, and I just answered that. True. Using the volume indicator for day trading in futures, 5 and 15 minutes. Some examples on how would you use volume. And I do that every single day in the live trading room. And I'll just quickly change this symbol here so we don't have to get to a screen. I'm just going to use the @ symbol ES. And let's take a look at time frame. Let's go 15-minute. So bottom line is, this is a very powerful tool. I generally like to compare an apple to an apple. Since we're trading futures on the S&P 500, the PMC, which is the market catcher, It's comparing the ES to the spider, ES to the spider. So this is an irrelevant indicator to have. I'm not going to change anything on this screen right this second because we're going to go back to an equity. This is my equity scanning page, right? I'm just doing this for simplistic presentation so that you can see it seamlessly so we don't run into a problem. All right. Let's see. All right. So here's an interesting setup that we look for on the particular volume indicator. Now, the bad news about this volume indicator is only available for VIP clients. It's not available on any other platform. This is a very special tool. This is probably my pride and joy of if I wanted to say my most prized possession, secret proprietary indicators, it's this guy right here. There's many times where on balance volume is I would say second best. I wouldn't say close, but I'd say it's a second best. My volume indicator tends to show more convergence patterns, meaning price makes newer lows and the volume doesn't. So convergence and divergence scenarios. For example, we could go through an example on a high and I can go an example on a low. So here we go. Now, again, this is not just recent history. This is right now. This is last night. This is the market as it rallied last night at 292.75 at around 1 in the morning. You'll notice that the on-balance volume trending higher, it makes a new high. Now, the theory is when the on-balance volume trends higher, it's supporting the fact that there's strong volume pressure in the market, and that means there's good buying. If you'll notice our volume indicator, this is the overnight. The momentum was weakened, and it was weakened all night long, and the market went up, which means this was not rising, showing strong participation in the market at all. It was, again, it was the nighttime session. It's very low volume to begin with, but the momentum of the volume was down. And as the market made a new high relative to a prior swing or a prior swing high, the volume readings were lower. I'm sure you can all see clearly they were lower. That doesn't mean I'm going to sell because there's no volume. It means you wait till a sell signal and it will be vulnerable for a decline. Now, if you're looking at just on balance volume, you may get a different impression, and the reading is simply this. Hey, that volume was so strong, I'm going to buy the dip. Well, where's your dip? Well, you could buy the dip here, and it still didn't provide the right trade or good results. So at times, I'm not saying it's a 100% perfect indicator, but it's certainly a lot better than on-balance volume. And on-balance volume is better than volume histogram. And quite frankly, I think volume histogram is good to look at whether one bar had exceptional volume like a blow-off top or a capitulation low on heavy volume on one single bar. That's my personal opinion. All right. I like to look at the overall trend of volume, and I like to look at the condition of the volume. If a market's rising and the volume can't get positive, there's something wrong with that picture, okay? So if you're looking to buy a breakout in the market, God bless you, but you better be quick about it. And the better setup is under weakening volume structure, the better setup is to go with the direction trend of the volume. Anyway, that's my volume tool, all right? As far as a buy, how do you look for a buy? On a 5 or a 15 minute. If the market makes a low and all of a sudden it has kind of a recovery and we get into a PPS buy signal, there's good, strong volume. Now, in all honesty, in this case, on balance volume also showed a good upside or accumulation in volume. What I like to see is that my volume indicator confirms by turning green, the momentum turned positive. That means we went from an improving volume aspect. The trend of the volume was improving, the momentum was improving, and there was the momentum bars keep getting green and the volume keeps rising and it supports that rally. Versus if the the momentum starts to weaken as it did in the final 15 minutes today, and again, the final 15 minutes of the day picked up immensely, or 30 minutes, let's call it, 40 minutes, would still follow through. And you did get some momentum follow through in the market. So while on-balance volume in this case also confirmed that, like I said, I didn't say on-balance volume was worthless tool. I said it's a second rate, it's second place next to my indicator, which what we talk about. The zero line breaks using JP volume indicator for day trading and futures. Going to show some examples. I think I just did. I hope I did good enough. For a buy signal, must the JP volume indicators be above zero line breaks for zero line for better probability signals? Well, that's exactly what red and green is. If the market is below the zero line, it's going to be red. And if you start to see improvement in the histogram improving, it's showing there's less and less negative selling pressure on a low. So that could have been just maybe stops. And again, right around before the cash open outcry was in that where that funky type of range is between 9 and 9:30 right there. You do get a positive green, and that would be a zero line cross. And yes, there's your change in momentum. All right. So when you get a pullback and it's still rising against the MAs and their volume is increasing, if you're nervous about being long, as long as that volume trend is positive and green and rising, that's a good thing. So that's how we look at that. All right. I do not use the genetic method for running backtest. I also use the exhausted method. But if you, in your question on Algo 17, I am usually using the exhausted method. Me too. Yes. The genetic is if you have a lot of tests and a lot of optimization, it'll just do some random, I guess is a simplistic way of explaining it. Exhaustive is as it states. It's exhaustive. It's going to run everything. It's not going to cherry pick, so to speak. All right. So let me go back and make sure that I put the chart back to it where it was. Those were some good questions. I hope everyone else found value out of that. Let me go back and now change to what were we doing? We've got, it looks like a scheduled optimization. All right. In your scans, which one do you like best? It was a scan question. All right. Well, and this will lead into the next question after that in just a second. My favorite for running scans is I always look for buy signals if I'm looking for a continuation pattern. But what if a stock's already in a daily buy? It's not going to generate a new buy signal, right? So if this is that's 15-minute, but the point is, let's say this is a daily chart and that's a weekly chart and that's a monthly chart. Market's going to continue up. It's not going to find a new generated buy signal. So my favorite scan literally is to look at if the market had like a few days down, I like to look at new buys. If the market is tearing to the upside, I like to see, are there new sell signals? If we get more sell signals when the market's going up, something is disastrously wrong with that picture. We should not be generating sell signals when a market index is going higher. So my preference is when a market's super weak, I like to look at, well, is there any internal strength? Are we seeing new fresh buy signals coming in? And for that, I would go to buy signal number 4, which is just simply unfiltered. It says it right there. If you highlight your arrow over what each of these scans are labeled, you will see what it says, no filter. So it's just a PPS buy signal, no filter, nothing, Zippo, that's all there is. Since more times than not, the high close doji generates trades prior to the PPS indicator. I also like to look at the high close doji. So a lot of times in the live trading room, it's exactly what I do consistently. I start with, here's what the buy signals are doing. Here's what the sell signals are doing. Here's how many low close dojis we have. Here's how many high close dojis we have. Ironically, coming into today, we had I think something like 60 buy signals and something like 460 sell signals. It was a really strange leading up to today's key reversal or gap higher. We had more daily sell signals. Today, on the 8th, I ran this scan before we came, and you can see, and I'll go to, if we just go to customize this, you'll see I've got all NASDAQ, all NYSE, all S&P 500. I mean, when I'm looking for opportunity in the market, I want to know, well, how strong was today's market? Did we generate boatloads of buys? And where was the concentration in new fresh buy signals? And in today, I want to be candid with everybody. TradeStation does not do a perfect job of classifying every stock. I don't think Plymouth REIT is a service. Children's Place is a retail store, not a service. My point being is it doesn't do a good enough job of listing the subsectors in the market. Etsy is an online home furnishing, custom, I don't know what the knickknack, I guess. I don't want to insult anybody if I say the wrong thing of what they are, but I think that's kind of what they do, my impression. Etsy got added to the Dow Jones. I don't know. Is it a services? Is it in the service sector? I mean, I don't think that's the right subsector, bottom line. So when we tend to try to get our ideas and work with the platform. Again, TradeStation is not my platform. No matter what I do, I can't change them. They're certainly not going to change anything that I want to change or improve on the product. Not in these times right now. Let's be honest. Commissions are dirt cheap. They have to face the regulatory agencies. That requires compliance officers, that involves lawyers. Neither one of those are working for free. Technology, the internet, servers, computers, office space, all of that costs money. How in the hell, if we don't keep them in business, heck, how are they staying in business? You know what I'm saying here, guys, ladies and gentlemen? You know, you also pay for what you get. So if everything's free nowadays and everyone wants free, and something breaks and there's no one to answer the other side of the phone, well, it's because you pay for what you got. And so that's where I'm kind of like coming from an honest perspective of the market of what we want. We have to deal with our own computer crashes. We have to deal with our own tweaks, our own bugs, our own things. And, sometimes we expect a little bit more than what we deserve. And even including myself. And so, trading, as we all know, unless maybe your emails aren't as spammy as mine, trading is not as easy as lickety split. Some days are better than others, don't get me wrong. And sometimes the market is a little tricky. Execution, position sizing, execution meaning getting filled, et cetera, et cetera. So trading is an exciting industry, but there's a lot of outside dependencies, meaning in order for me to execute my trade, the platform has to work. In order to execute my trade, my internet has to work. In order to execute my trade, I can't have a potential computer crash. That will all hinder my performance, my emotional state, and how I feel in that particular moment. True? So bottom line is when we run a scan, I'm working at the best that I can for what the platform has to offer. And at the time, this was pretty good. All right, so bottom line, let's move forward and introduce this, because this is a different question. Now, I've got good news and I got bad news. This question comes from, again, hi, Mary. And I think I know why, because there was Mary sends the email alerts out and says, hey, there's a PUG, just a quick email. If you would like a question answered, send it in to us, Mary person. So people reply to Mary because the email came from Mary. So in all honesty, I don't deserve a hello on these emails. It's all good. But the question is, hi, Mary, a question for John on the PUG meeting on 4/8 in HGSI. And that's HGSI. HGSI is a platform some of you may have. Some of you might not have it. We have Genesis, we have Thinkorswim, we have TradeStation, and the person's user group concept was designed to do I guess, a customer appreciation, a question answer once a month, give people a chance to say, hey, I had a question. I don't know enough. I don't know what I don't know to ask a question. And therefore people over time will ask a question. And so this is that forum. So whether it's TradeStation, Thinkorswim, Algo 17, I try to answer the questions accordingly. In HGSI, I've got bad news. I can't answer the question. But the question actually states, one can only enter one set of OR statements in a filter, i.e., no nested OR statements. Since I'd like to add to a filter PMC equals outstanding or improving to say, hey, show me a scan of stocks that are improving or outstanding. So first off, let's discuss what outperform is. Outperform, not outstanding. Outperform is outstanding. There's 4 colors here. You've got red lagging, no bueno, red bad. Improving means it's getting a little bit better. Outperforming means it's doing great, outperforming the relative market in terms of percent change to the overall performance of the S&P 500. Weakening means it's still good, but it's underperforming. Now, here's person's market catcher right over here. This is Etsy. And I want to kind of look at the scans in HGSI because right here, if I'm not mistaken, this is actually today. Coming into this morning, we had 365 stocks that generated sell signals today, coming into today, versus, and that's daily sell. And that was versus how many daily fresh buys did we get? We had like 66. So a few minutes ago, I said it was 400. It's actually 300 buy sells versus 60 buy signals. So coming into today, if you didn't know how the market closed today, you didn't know what positions were going on, you would have heard me say this morning, hey guys, there's not that many fresh new buy signals. The overall advanced decline kind of weakened in the both the Russell as well as the S&P 500. I even sent a tweet. There's a slight divergence setting up. Now, it takes a lot to generate a daily sell signal. It takes a lot. About 10 things have to happen in order for a sell signal. It's very rare do you get a sell signal and the next day it flips right back into a buy. It might take 2 or 3 days or 2 or 3 bars to offset or, let's say, undo a sell signal, if that makes sense. I had, it was interesting because we had in the automobile, NIO, we all know that's an electronic vehicle segment of the market. So we had in materials, and that's what I want to go. And I thought I had this daily sell signal somewhere in there. I believe there was, let's go over here to name. And let's go down. And I thought I saw U.S. Steel. I did. It's in materials, steel producers. Okay. Now, if you notice one thing about HGSI versus immediately these guys, TradeStation, they don't give us the subsector or the specific name of what is generating buys and sells. And that's where HGSI accelerates. Now, Tom wants to know how can he filter things a little bit better. And that's one of the unbelievable things about this program is you can go and you can customize and you can edit and you can add things all you want and filter out other combinations of what's in their data bank. Okay. So whether you want to go with AD, price change, closes, whether you want to do volume, all kinds of things, earnings, you can really spend some time generating buy signal filters and sell signal filters with combinations of, again, fundamentals, volume, and other technical tools, which is nice. Since it's not my program, I cannot answer the question, how can you add another or filtering system, Tom? So you need to get a hold of the folks over there at HDSI, and I will probably, because tomorrow's Friday, not do it tomorrow. Who knows? I say I'm not going to do something, I do it. I will send an email out and forward your question and see if we can get a proper answer. It would have been nice if I'd gotten the question and I was able to do that prior to today's meeting and then have the answer for you all locked up tidy. That would be cool, because I think that is to have a couple different filtering. I think it's a great question, and I think it's a very smart thing to do. And I would have loved to have shared that idea with the community. Absolutely. So besides having just like, I would like the PMC greater than 0, or maybe show me stocks that are only improving or improving is fuchsia, and again, outperforming. If you're looking for a buy, improving, outperforming, that's the beginning phase. And since we already had a question, by the way, I wanted to go with this and look at U.S. Steel. So here's a scenario here that, in the way I've lined this up, U.S. Steel, it generated a new fresh sell signal coming into today, and the relative strength on the PMC was weakening, but it's in a weekly buy signal. So does that mean I want to buy the dip? No, not today. I would buy when it generated a new fresh daily buy in conjunction with a new fresh daily buy if it's in a weekly buy. What do I mean by that? Okay, well, here's a weekly buy signal, and if it rallies and it has a 3, 4, 5 day pullback, 1, 2, 3, 4, 5, 1, 2, 3, today's 4, 5 day pullback, and then maybe tomorrow, the next day, it generates a daily buy at lower level while the weekly's still in a buy mode, that would be an interesting setup. And now with that stated, let's compare the relative strength. And so this, kind of like with the volume tool and the PMC, I think is a great little example of where we can look at how these scans help people. So we're in a weekly buy, we're in a monthly buy, and I like to look at the monthly charts. And what's the monthly chart look like? Wow, big dynamic change. The volume started to see some relative improvements when the market was down in here. Here's a great example that highlights what we were just talking a minute ago. The on-balance volume from this point, if you can see exactly where I'm at, on the week ending or the month ending September, look at the volume. It made a new low prior to the low that was registered in July. Can everyone see that? I know it's not blown up, but hopefully you can see that a little bit. I don't want to mess up too much chart because we're running out of time. Just to answer the question, is that yellow point lower than the prior point, and is the prior point lower than that point? If you say yes, then you have reading glasses on, and that's correct. At the same time, my volume indicator is saying, whoa, 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 the momentum, the volume is actually drying up, and it's actually turning positive. It's starting to turn positive right there. While the on-balance volume did uptick, this actually, the momentum of the volume turned green big time. And it did so right at the end of a monthly buy signal. So when I tell you that this is kind of a convergence pattern where the momentum is getting their higher low readings, this is higher than that, is higher than that. That's not quite higher than those two, but certainly higher than the prior bars, right? You can see the trend is improving as the stock was sideways to slightly lower on the closes here. That closed lower than the prior close, lower than that close. That's a mini downtrend, 3 bars in a row. So if I can train your eyes to say, hey, if you're looking to get short that stock and the momentum is starting to improve, I think twice about it. On the other side of the coin, the momentum is still positive on the stock. It's in a monthly buy, but it's gone from, let's face it, $7 to $26, and you want to get long the stock now. All right, well, it's kind of rough. It could go either way. So for that, we turn to our weekly analysis. And here's the person volume indicator. As the market started to rally and made a secondary higher high, what's wrong with this picture? It's got lower momentum readings than a prior momentum reading. And the OBV also is showing a lower reading. This is very pronounced. So when you look at the indicators, they're helping us to, while they might not be perfect, they definitely are showing there's something weakening. If a market is making a higher close and a higher close and a higher close, why is there no real strength behind that right up in here? Then it means that it's susceptible for a pullback, bottom line. It doesn't mean maybe I should buy it now at $25 because I think it's going to 34. If this stock was really strong, you would have had stronger momentum of volume. You would have seen an uptick in the volume on a new buy. You would have seen the volume remain green on the trend. That's the general idea of the condition of the market to give you a more educated decision of what to do with this particular market. So let's take a look at US Steel. I've got a 15-minute. Let's look at the daily. So 10 to 1 to the other. HGSI generated I said 10 to 1 to the other because HGI generated a sell yesterday's close. TradeStation did it a bar early. 10 to 1 to the other. Some days HGSI is going to be a day early, and sometimes TradeStation is going to be a day late. Don't ask me about it. I can't tell it. It's maybe an algorithmic moving average component that the data may have closed a millisecond and gave a different print. I don't. That's the best explanation I can give. It's been plaguing me all my life between platform and platform. Genesis would give signals well before Thinkorswim. TradeStation would give them after Genesis. Then some days everything was reversed. Okay, and as HGSI, just throw that one in the mix. The same stuff. Here's the aspect of understanding the indicators and the tools in which you are using. And I always like to be, rather than just share my stuff, I always like to be fair and impartial and give, if I claim that my volume indicator and the momentum of the indicator helps to uncover divergences a little bit better than OBV, I like to share that with you. And so when we get a market that rallies and the PMC, which is a relative strength tool, when you're looking to take a buy signal, or in this case, maybe should I tighten up my stops? If you're long a stock and you have a last conditional change of that little line in the sand, if the volume is starting to weaken, I would say tighten up your stops. And if you get a daily sell signal and at the end of the day, you don't want to tighten up your stops, then be prepared for maybe follow through weakness, right? When the momentum of the stock is starting to weaken, right? And then you get a sell signal and then follow through weakness. And the relative strength, the PMC indicator, is weakening. And that's what blue means. It's weakening. It doesn't mean that it's bad. It means it's weakening. But this picture here gives probably a more distinct setup of U.S. Steel pulling back some, so to speak. So bottom line is, when I like to look at a trade for or run scans for everybody, using these tools are what gives me an edge. And it's not about price as much as it is the condition of price. If a market is rising on weakening volume structure, if a market is rising on weakening relative strength, it is el no bueno, which is my Spanglish for it's not very good. And I think that's one thing. If I'm looking for a buy setup, I want improvement in relative strength. I want to see higher time frame analysis looking more wholesome. Those are the kind of things that I'm looking for. On the other side of the coin, one trade that we have on is an call spread, which may or not work out for next week, but it's in PayPal. And just in the live trading room on Monday, we came in with a high close doji, blah, 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 yada, yada, yada. And here's the thing. Volume started to turn positive. It's been positive. And people, which my humble opinion reflects that people have been willing to buy it up here, and there was volume structure. It was improving. The volume never went negative. It lightened up, but it never went negative, and now it's raced to the upside. The relative strength started to improve. We did a weekly high close doji, and I know I did this and discussed this in the room. It's under recording. I said there's probably a $20 upside. The 1-to-1 risk reward ratio would provide a move back up to around 267 in this trade. There's a gap up here, a last additional change, an old pivot. And I sound like an old record player if you go back to Monday and listen to that compared to today, because this is exactly what we said. And all of a sudden, lo and behold, the market's up, $9, 65. It didn't quite get to 67, but it's, still got upside potential. Now on balance, volume looks a little more wholesome. So running a scan on a daily high close doji, fuchsia means that the relative strength was starting to improve and the volume was already darn positive. Combine that with the fact that, by the way, weekly, which we did this in the live trading room, the relative strength was improving. Now, the weekly volume was not really all that great. I'm not going to lie to you, but we have a weekly high close doji with improved daily strength. So that suggested that we got at least a move that could be short-term in nature to pop right back up to around the 267. And that was my analysis, and that's what I gave. And that's how I try to focus on looking at and utilizing the scans that we have, and also looking at the volume. Now, like I said, I look at the monthly. So I wanted to be honest with you and say, hey, by the way, the monthly trend, and that's where I start first. Everyone asks me, well, what's your favorite time frame? I look at the monthly trend first and foremost. If the monthly trend is still positive, it tells me that the market is, and if the near term confirms by showing positivity in the indicators, which we just went through, then I'm more likely to say, hey, the market's giving us a better edge of higher time frame strength. If the monthly chart's in a bullish bias, man, and it's got some positive indicator readings, you're more likely to get survive let's call it a quick down jab in the market. Now, I think that the indicators, whether it's Thinkorswim, TradeStation, HGSI, how do you incorporate those into improving your scans? I think that, we have the ability to do it in certain platforms. HGSI certainly has that. And again, we had a question. Tom's question was, is a workaround using the slope of the PMC greater than 0? And that would be defined by if the PMC, the slope, it's positive. Now, here in TradeStation, we did with green dots. Hold on a minute. And we didn't code that in on person's market catcher on HGSI. Tom was talking mostly about HGSI. But if you changed your monthly chart, you'd say, hey, man, PayPal solidly, I don't know what you want to call the slope there, Tom, but that's what that moving average is. It's yellow. Yellow means it's pointing up. The average is going up. If it's blue, it means the market is below and it's falling, and therefore the relative strength is this stock at that time was underperforming relative to the S&P 500. And don't forget, there's a time where we went from about January all the way where the trend went from peak to trough from January of 19 to January of 20. A whole year went by and that stock went straight down. The relative strength was leading the way to let you know, while the stock is still okay, it's weakened and weakening. When the relative strength's improving and the volume trend's doing pretty good, it gives you a fighting edge and a better edge in the marketplace. I hope I've answered that question. And so that when you get a buy signal, you say, hey, I got a buy signal of the relative strengths. It's improving. It's getting less bad. I'm seeing fuchsia. There's some strength in there. And oh yeah, even on balance volume had a little mini uptick. So that's how you would add more filtering to your HGSI with their OR statements. You're going to have to ask them. But you're right and correct in thinking about the slope, a PMC greater than 0. Okay, and it's improving. Improving means fuchsia is why we color coded it, because it means it's improving. It might be below the 0 line, but improving is good. If you're looking for a buy signal, you want relative strength to be improving. You don't want to take a buy signal and the relative strength is going negative. That's no bueno. That's bad. Okay, and so you can do daily, you can do weekly. And I'm just saying, go and confirm by looking at, if you're looking at a scan, how much extra time does it take to say, hey, I got 20 stocks, they look good. Let me look at the monthly chart. Build a page, 3 charts, just like you do or you saw on my screen. Monthly, weekly, daily. All my work says that. All right, it's 5:37. That concludes our time together. I like Tom's questions. I wish I had more time to work on that. I would have gotten the answer, because I always think that's kind of a cool thing to have additional filtering on running scans. And with today's day and age, wow. I mean, what are we at? 9,000 new stocks? There's a new IPO every day from Bumblebee. What were some of the names that have come out recently? They're just, even who was the last? Airbnb, right? How's Airbnb done? Everyone was really hot in A and B. Isn't that Airbnb? A and B? A, B, and B. Airbnb. Help me here. I can't even think twice. I thought it was Airbnb. No, it's B&B, right? No, what's the symbol for Airbnb? I'm going goofy. A-B&B. Oh, man, A-B-N-B. You know, they tell you when you get the shot, you feel lethargic and forgetful. Funny story. I went from the kitchen to the beverage refrigerator in the back, and Mary asked for a Fanta pineapple. By the way, Fanta pineapple is pretty good stuff. I get to the refrigerator, go, what the hell did you ask for? And first I was standing in the refrigerator going, what am I doing here? I just completely spaced out what the hell I was doing here. Anyway, that I'm now messing things. I don't think that was old age. It's this vaccine thing, brutal. Which, man, if this is just a small sample, I'm so glad I didn't get COVID, like I said earlier. So Airbnb, daily, weekly analysis, there's not enough. When you get to these newer IPOs, you don't have a lot of data to fill in the blanks to get any insights. But here's a stock. Eventually it'll go well, maybe, right? But right now it's kind of dead money. If you have stocks that rise, and I would probably prefer to show you, if I could, the 1 hour. And again, when you don't have a lot of time, you need for a comparative analysis. And I'll put things back where they were. Let me see if I got one already picked out. Here we go. Sure. Let's look at this real quick. ANB. ABNB. I can't even get it right from 1 minute to the next. Embarrassing. I'm sorry. Please forgive me. So, I guess it's, very much simplistic in what I'm saying. If you're bullish a market and you say, hey, even on a daily basis, one of my more famous things is when the market is below its longer term, it's hard to see with all these dots. Now I've got a daily chart with daily pivots, weekly pivots, and monthly pivot. What I do have is, as you can see, we just started to fill in time. It took time for the data to be created for back testing or for its information to create the indicator. So new IPOs or new stocks that come out, we don't have the luxury of saying, oh, what's the history of its trading condition, because they're new. So with that said, here's A, B, and B that if you're looking to buy the break and you want to buy the pullback, but the relative strength is weakening and the volume structure is no good, breaking newer lows, that shows that I can't join that party or that parade right now. What I would prefer is if we can get the market in a daily buy and the relative strength to start seeing some improvement in fuchsia and blue, then it might be time for an Airbnb liftoff. But until then, I'm just explaining different stocks and, again, how the indicators can help you to define not what maybe to get in, but what to avoid and under what condition. If you have a market that's rising and breaking out, I mean, clearly breaking out here and there's no volume making a new high. I didn't say on balance volume was worthless. I said it's secondary to my volume indicator. But a market that's breaking out to new highs and the relative strength is weakening, clearly you can see that particular trade that occurred, that market broke out to a new closing high. There was not a new confirming volume reading to suggest that that was new volume coming in, new buying pressure, adding to more upside. And the relative strength at that particular time, it starts to weaken. That's not a good time to buy a breakout, by the way. All right. All right. That does conclude our time. We went a little way over. It's 13 minutes past our bedtime. I thank everyone for joining me, not joining you, but joining me through this time. And I will see you at our next PUG meeting, or I'll see you tomorrow in the live trading room. Thanks for coming together, gang. And George, thank you very much for your support. And again, Scott as well. It's been a while. Eddie L, I love you, man. Thank you very much, guys. Bonnie, thank you as well. And yes, Joel, I do appreciate that. I don't want to complain, but I will say this. It's like the flu shot. Hey, thanks. I got the flu. Thanks for giving me the flu shot. Yeah, but you would have gotten it worse. Well, I don't know. Maybe I wouldn't have. But do be prepared if you haven't gotten the shot. Do be prepared that you may. Everyone's different with COVID. Some people got COVID and didn't feel anything. Some people got COVID and died. I mean, it's just bizarre. There's no explanation. I'm just telling you how I'm doing, and just maybe I can share my experience so that people know, hey, you just don't get the vaccine and walk out of there and feel nothing. So with that said, peace. Love you guys. Be good. Thank you, Andy.